There we go. Right, welcome everybody. It is Thursday, the 27th of August. We're going to go through London and potentially later on, but the most importantly, what is happening with the macro side of markets today. So let's obviously, go through a little bit what happened yesterday. And, obviously the expectations of everything. We've got I'm going to have to remember everything that I've read this morning. So we've got about a 45% chance of an agreement, so talks are obviously in process, which is good. Yeah, but obviously still there was a ship, I think, in Hormuz got hit last night. Uh, but obviously, everything is cooling and we can see this by oil. You can see over the last kind of week, oil's obviously gone from trading, closer to kind of 90, which is that danger zone, back down to, we're approaching 80. We did test it yesterday. We rejected it, but obviously, again, we're already down 0.136% or 0.4%. So, we can obviously, rather than trying to read X and go through social media, go through news channels, this is the escalation, de-escalation pricer here. And obviously I think you guys must have noticed that this week has been quite smooth, because once this war's out of the way, trading is relatively easy, because then we can go on the overall macros, expectations, and obviously build off the back of that. We don't have this, these other views kind of coming in. We don't have political, um, yeah, uh, political situations. Coming in and reacting, making the markets do things which are a bit unexpected. It's normally relatively easy. So. Let's have a look at a couple of things first, and then we're going to have a look at the news as well. So yields kind of holding, but obviously they are dropping too. So I would say that dollar has caught up with yields now. So we don't have that kind of divergence displacement that we've been happening. That has been happening. However, if yields continue to the downside, that's going to potentially cap dollar upside. All right, maybe we can still obviously hit this 99,500, but it's going to cap the dollar upside here. Now, what's driving the dollar, all right? Because that is obviously the big question from yesterday. We obviously had a few data releases. If I refresh my page and go back to yesterday, we obviously had a few data releases yesterday. And it was relatively good. Inflation, which is PCE here, holding, but coming out slightly hotter. Yeah, all right. It's been coming out, slightly hotter. So that's obviously putting a bit of demand on, the Federal Reserve keeping interest rates higher. All right, and that's what's given dollar this tailwind here. It's not we obviously know that it's not acting as a safe haven. We obviously know that it's been a relatively kind of higher risk market this week. So we can obviously see that yes, this kind of news that potentially a hike could happen is what's obviously driving the dollar, and I do think it's going to continue to drive it. But what's been quite nice about this week, it's been a nice, solid week. This is creeping back up again, especially after days like Monday and yesterday. Just obviously starts to put some momentum in our trading. Gold was a really nice top up yesterday, but it's been smooth. We've been pretty smooth, not very much drawdown at all. So I've been pretty happy. However, all right, today is one of those days where we've had this nice dollar drive up. We've broken through these levels here, which it was, struggling to break through around 99,100. Broke through that easy. We've come back down, retested. It looks like it might potentially continue. I don't think expectation is going to drastically change, from yesterday to today. But like always, it's, you want to try and find the best places to buy, all right, or the best places to, sell, all right. You're not going to see that, right, what, we've broken through here. I'm going to buy dollar from here. No, because that's not how everyone else looks at it. Everyone wants to bargain, right? Yes, they might start scaling in here, but they're going to start increasing positions around here, all right. And obviously that's why we get this reaction, and we do get trends, all right. It isn't just, structure. It's, yeah, it's, human, nature. Everyone's going to put the majority, if they're going to be buying, the majority of their buys here, all right, because, they know that there's, support here, and, that's going to be the most logical place to buy. Yeah. All right, so these are obviously all things that we need to look out for here, and obviously be aware of. So yeah, are we going to clear this high here? Who knows? Now let's obviously have a look at what is happening today. All right. One thing we have to be aware of today and tomorrow, we've got something called Jackson Hole, which is a yearly Federal Reserve meeting. We've got to be aware that obviously it's happening. And obviously we have to be aware that some, as there's loads of media there, and obviously everything's gonna, they come out, and obviously everything's gonna get leaked into the market. So today and tomorrow could be a little bit volatile, so just be aware of it. um but I do think there is an interest for everyone to try and strengthen the dollar slightly, to try and strengthen it up to 99,500. I think that's going to put it into a nice kind of, solid position if we're somewhere, round here. So that's where I would like to, see the dollar. And I'd like to appreciate that, obviously, yes, their best interests are at heart. So, and obviously I've noticed we've got a question here on the jobs market. All right. So yes, jobs are going to have a bigger impact. We could see something completely, well, we can see this flip either way. All right. So we're obviously, understanding, because we're building our picture up here of, obviously, how the US dollar is doing. There's pressure because of higher inflation, and the labor market is a big player in their decision, so we might see jobs coming. I mean, it's obviously going to be one of three. But obviously, if jobs come in as expected, it's going to be priced in. It's going to be, no issue at all, and we'll kind of continue the way that we are. If jobs come in, you know, cooler, so, there's obviously less jobless claims, or if they come in higher, we could have it either or here. All right. So don't just presume that, right, what, if initial jobless claims is green, then it's going to be great for the dollar, or if, or or if it's red, it's going to be bad. We could see, because what I think might happen is, if, say, for example, jobs came in, um, and there was more jobless claims than expected, right? We might see a short, sharp burst here, but then there's going to be even more expectation for them to obviously hike, so obviously that might drive, or obviously if jobs come out cooler, we might see one early drive and then a drive back down into this 99. All right. That's the kind of expectation. It is not as, as black and white as if this number comes out green, I'm going to buy the dollar. If it comes out red, I'm going to, sell it. You got to understand the picture. They are waiting for this data to come out, all right, because it's going to, you know, either increase chances of obviously a hike, which is, what I think lots of people would, like apart from Trump. But yeah, so we'll wait and see what happens a bit later on. We're going to position ourselves correctly, and then obviously we can build off the back of what comes out. So let's look at the market as a whole. We got yields round about break even. We got dollar round about break even. We got gold. I'd call this, roundabout break even. Let's, start on gold. We had a really, really good trade yesterday. Should have actually held longer. But obviously, like always, I'm actually having some quite good luck on scaling gold in the afternoons. Let's do green. I probably did green for Asia yesterday, but all I'm marking up here is the previous daily high and the previous daily low. All right. So then I want to go on to the 8 hour and I want to mark up Asia. So I'm going to mark the session high, which is quite interesting because what is happening with the dollar price, sorry, with the gold price at the moment is we don't have those, safe haven kind of demands to push it up to the upside. All right. Yes, we've got, gold is also, for those of you who don't know, it's an inflation hedge. All right. So, yes, we do have relatively high inflation. So, that's what's kind of keeping gold where it is. But you've also got to think, right, for, for the next influx of orders to come in to push this higher, where are they going to buy from? Because no one likes to buy from the high. We don't. The big boys don't either. All right. So everyone wants to wait for this overall kind of pullback, and then it might be worth, just obviously having a couple of positions around this area potentially, so unless, something drastic comes out, but I'm expecting gold to kind of slow a bit. We obviously had its slow era here back in, well, most of the early part of August. And we're kind of expecting that here as well. So, let's wait and see. We've got a lot of support here. We've got previous daily low. We've got Asia. London has already tested Asia. So I'd like to, probably let London play out, and obviously then we'll do what we did yesterday and look to target into one of these, zones here. What would be quite nice actually is if we broke below here, um, and then just targeting up into this area would be great because like it's going to be hard for it to break through. It's going to 100% be, sucked in because we've got a, solid wall here, potentially, then obviously coming uh, down into this area here. But you know what? Let's wait and see what happens. So our trades for today. Let me just check this because I'm pretty sure we've got this pretty smack bob on here. So let me just get my thing up here. So we are currently in Aussie and pound. So Aussie spot on. We can't argue with this. Trigger number one popped up nicely. Then we've had this crush back down. I'd probably be looking maybe to pull stops to break even. So let's we'll wait and see. But I might pull for safety. I might be looking to pull stops to break even here. GBPUSD just tapped in, and I might do something similar just because we're struggling to break through here. Euro hasn't triggered. Didn't quite pop up here. So but you can see the overall kind of bounce here. So yeah, that's probably going to be my goal. Potentially pull these two to break even. And I'll probably cancel these higher two entries on. GBP AUD, sorry, GBP USD and AUD USD. So there is kind of I think gold, sorry, I think that the dollar will come up and obviously test this area here. That is what I am expecting is to at least come up and test these highs, and then hopefully that's going to drag us down. Note today I've kept everything smaller. We've only got 23 pip take profit. I think on AD USD it's only like 14.7. So it's I'm keeping everything a bit tighter because yes, there's going to be a little bit intermittent, in regards to the dollar as to whether we can push to the downside. Any kind of yen pairs, and let's obviously have a look at USD JPY here, and let's have a look at it on a higher time frame. So any yen pairs, we do have. I think tomorrow it was, there we go, CPI data. All right. Expected to come out a bit hotter. All right. So, this is where, just like the US, interest rates might be raised, and also another hike might be pending. But we know that hikes only get they're only in kind of high territory above this one, 60. So if I make that red, I think I did that previously. So anywhere in this area here, Bank of Japan might start buying their own currency to obviously drive it into a good level. But I don't think they're going to be as worried about it. You've got obviously yields, starting to drop, which is obviously a hedge that Japan do. They'll obviously hedge their currency by buying bonds. Um, and then, so naturally, obviously, if bonds get too high, it crushes the currency. You've also got, because they're one of the biggest importers of energy in the world, because the price of oil is a bit cheaper. They're not going to be as worried as what they were previously. So yeah, that's about it from me. Right, let's have a look here. Greg, first day back after being away, noticed that today's entries have a tight stop loss in TP. I think I've been through that, Greg. ADUSD and GBPUSD triggered. If you have to look for buys on your USD, where would you place your entry? Are you in a buy, Alex? If I had to place buys right now, I mean, with current market conditions, to me, it would be down here. Depends on obviously how you're trading too, So, but obviously, intraday, you'd want to see this down here. But we are also starting to get a nice, move here. So, you know. You'd want a new low to be created, and obviously this is where you can, I mean, it doesn't work all the time, but you can use the Fibonacci in an opposite way. All right. So for example, if you're using it, say you're going to class this as one here, yeah. Right. Yes, we've not kind of reached our entry area, which would be somewhere like here. Yeah. All right, you'd ideally, from this move here, you put it at the bottom, or from top to bottom, you'd want a retracement between 61.870 to then continue. But but how you can also use it is you can use it for a target area. All right, so you might be looking for a reversal anywhere within this area, a bit like this here. But obviously, you are going to be going against trend if you're buying, so it needs to be at least at equal, low here. But as you can see here, you might have spotted this big green candle here. It's within your, zone. So, you could have either entered here. I'm not condoning this trade at all because it wouldn't have worked out. Because if you look at a 1 to 2 would have to be somewhere here. Your stops would have to be below. Oh, it's raining. Or you can obviously wait for a 50% retracement on this candle here. And then obviously it makes it a little bit more realistic. So I wanted to, you probably would have hit TP here, something like this. There you go. Nice 1 to 2. So but obviously you would have had your nice rejection candle here, waited for obviously, 50%, which again, if you're looking for an entry, Fibonacci tool does come in handy, so, you might have had your entry here, all right, 50%, and then obviously pushed up. So that's probably the only thing I would do. I mean, I'd be looking at trend continuing, nice and easy. You might want to target, like I'd said, you might want to be looking for your reversals in this area here. Yeah. All right. So, anywhere within this kind of area, it's quite a large area. You can make it smaller if you want to, but that's what I would be kind of targeting, if I was going to go against it. Or you've got to obviously be looking at the dollar, but realistically, for you to change your intraday outlook, this kind of needs to break here. All right, so trend changes. We do have a clear trend here. Right, Greg, I was late this morning, jet lag. I know GBP and AD triggered. Seems to be slightly retracing. Have you moved your stops to break even? I haven't done anything yet because obviously I'm live here, but yes, I would be looking to move probably stops to break even. I mean, it's also pretty small, and we've had a very, very good week too. So, I'm probably not going to pull stops because yes, we've got obviously a 5 pip stop on Aussie. Even if you're doing all three entries, you got what, 7 pips plus 5 is 12 plus 3.5. So we got about maybe 15 to 16 pips total. It's not going to kill me if that hits, stop. I would like it to go a little bit more. But obviously, yes, if this breaks, then we've got to wait and see. So yeah, I'm probably going to hold mine. Because I do think that this is achievable here. Same obviously with pound too, but obviously there is a lot of support here, so we need to be aware of that. Yeah, right. If that is all the questions, I'm going to end it here. Hope everyone has a good Thursday, and yeah, let's smash it. So have a good one, team.